Ever wondered how the stock market works? Well, let's dive right into the heart of the financial world and unravel this seemingly complex universe. Picture a bustling farmer's market. Stalls teem with a plethora of goods, fresh fruits, vegetables, artisan breads, and much more. Each stall owner sets their prices, influenced by the interplay of supply and demand. Now, replace these goods with shares, pieces of ownership in a company. That's our stock market. It's a global marketplace where millions of individuals, corporations, and governments come to buy and sell shares. It's a dynamic, ever-changing space where prices fluctuate based on supply and demand, just like in our farmer's market analogy. If more people want to buy a stock than sell it, the price goes up. If more people want to sell a stock than buy it, the price goes down. Think of the stock market as a giant global farmer's market where shares are the commodities being traded. But who are the people selling and buying in this market? Let's think of the stock market as a grand bake sale. Here, companies are the master bakers, presenting their finest cakes for sale. These cakes represent the company's shares. Companies sell these shares to raise funds for their business, much like a baker sells cakes to keep their bakery running. On the other side of this bustling marketplace are the investors, the customers in this analogy. They are the ones buying the cakes, or in other words, the shares. Investors purchase shares with the hope that the company will flourish, that their chosen baker's cakes will become the talk of the town. If this happens, the value of their shares, their slice of the cake, will increase. So, just as a baker hopes for a successful sale, and a customer longs for a delicious cake, companies and investors both have their hopes tied to the stock market. Ever heard of the phrase, "the market is up" or "the market is down"? This refers to the performance of stock indexes like the S&P 500 or the Dow Jones. But what exactly are these stock indexes? Let's break it down. You can think of stock indexes as the stock market's version of a school report card. You know how a report card gives an overall view of a student's performance in different subjects. In the same vein, a stock index reflects the performance of a selection of stocks, giving a snapshot of the market's overall health. Imagine a basket. Instead of fruit, this basket holds shares from various companies. The total value of this basket fluctuates as the prices of these individual shares change. That's what stock indexes track, the aggregate performance of this basket. So when you hear the market is up, think of it as the stock market's report card showing good grades. Now, how do investors make money in the stock market? Well, there are two main ways, which can be likened to a fruitful tree and selling an antique at a higher price. Imagine you have a tree that produces delicious fruit. If this tree were a company and you were an investor, you'd own a part of this tree. When the tree yields its fruit, you get a share of the harvest. This is what we call dividends. As an investor, when a company makes a profit, you receive a portion of that profit, similar to enjoying the fruit from your tree. Now let's imagine you have an antique, say a vintage clock. You bought it at a certain price and over time it has increased in value. When you sell the clock, you make a profit. This is akin to buying shares at a low price and selling them when the value increases. Just like enjoying the fruits of a tree or the profit from selling an antique, making money in the stock market can be a fruitful venture. So, what have we learned about the stock market today? In our journey, we've explored the stock market as an expansive marketplace, bustling with activity where companies and investors come together. Companies, eager to raise capital for expansion and innovation, sell shares of their business. Investors, on the other hand, are on the hunt for profitable opportunities, ready to purchase these shares with the hope of reaping future benefits. We've also delved into the fascinating world of stock indexes. These are essentially scorecards, tracking the performance of a group of stocks and giving us a snapshot of the market's overall health. And let's not forget our discussion about making money in the stock market. It's not just about buying low and selling high, but also about dividends, stock splits, and the power of compounding. Remember, the stock market might seem complex, but with the right knowledge, it's just like navigating a farmer's market or a bake sale. Happy investing!